17 November, Thursday, MAO with Cal. Guys, if you are bearish, this video is a must watch, okay? Now look at this picture here, the calm before the brewing storm. Now I understand that people are asking me why am I always the barrel of all the bad news, but you must understand that we haven't get out of the storm yet. In fact, in my belief, we are at the eye of the storm right now, and I'll show you more with more details later on. Okay, let's go. Now, first of all, disclaimer apply as usual. Do understand that make sure you do your risk assessment, and thank you AIMS for the kind sponsorship. Now, before we go into all the important economic data, let's talk about Tesla first. Okay, now Tesla yesterday came back down, trading at 186 again. And of course, I received some calls on the side and say, Cal, I thought it's going to 200. Well, it did went to 200 2 days ago. But the thing is this, I've been saying this outright. I said that for Elon Musk right now, I believe that Tesla will have big problem crossing 206. Remember, I said that about a couple of videos ago. And I mentioned that we're going to see a bit of resistance at this 206 marker here. So what happened is now that Tesla, you can see that the volume is actually coming off. And this is not a good sign, okay? I always said this, if the market is going up after hitting a technical point, it must come with volume, okay? When it doesn't, then this is actually a very dangerous position. That means that the rebound is not really real. It could be a technical one. And of course, based on what you see right now, there is a chance that by March 2023, we can actually see Tesla trading at 137. Okay, now of course, this is going to freak a lot of Tesla fans out, but what is the reason for Tesla coming off? Well, apparently this statement. Elon Musk say in court he doesn't want to be the CEO of any company. Oh my god. I mean, we can understand he's probably pissed off with Twitter buying at a high price right now, but come on, man, we have the other companies, especially Tesla, right? So imagine if this Elon Musk decided to follow what Jeff Bezos does and just let go and move on, then I'm going to tell you this, Tesla going to get hit very badly because Tesla, in my opinion, is just Elon Musk, okay? So this is something that you must understand. So of course, technical ground, I do see there's a potential that 180 is the first support level right now at 180. Then the next drop will be 162. There's a huge drop there. And of course, the final figure is 137. Now, the thing is this, I will repeat myself one more time, okay? Tesla must hold 180, okay? 180 is a critical level. It has to stay there. If not, traders, you need to be very careful, all right? Okay. Now, let's talk about the crypto exchanges first, okay? Now, we had known that BlockFi is planning bankruptcy. Oh my God, that is just within days after the FTX fallout. We all know that. Now, I already warned back then there will be a chain of reactions between the exchanges, and of course, when one leads to the other result, there will be a run on the cryptocurrencies in the exchange. And when when most exchanges they actually leverage it out, we're gonna have a bit of problem. And don't you find that it's something very, very familiar, right? All right, to what we've seen in Lehman Brothers too. Right. So Coinbase CFO actually came out and said that there's a full contagion impact of FTX. I'm going to tell you this up front. I don't believe in this. Because you just imagine, there are like, say, in a country, they say that there's 10 banks, okay? And of course, after that, right, one of the biggest banks collapsed. So of course, the smaller bank will say they are not affected or something like that. But you can imagine when the panic and fear spreads, more and more people will just decide that, you know what, rather than put the money in the bank, let's get our money out. And when one leads to the other, the pressure will be there. And of course, we all know that how banks work, right? The cash doesn't stay in the bank, not all of that. So that is where the fear factor comes in. And of course, now Gemini and Genesis are all announcing new restrictions. So think about this. Why are they restricting? Because like I said, again, the so-called money, aka cryptos, are not really in the exchange. So they know what they're trying to do, and things are going to get very bad, okay? This is my personal opinion, and I think you should be very careful. And that's the reason why 2-3 days ago, I already mentioned on my Facebook saying that there could be a Lehman Brothers 2.0. Remember? Yes, indeed. See, I am very open here. I mean, nothing to hide, and I actually give you way in advance notice, okay? All right. Then, of course, yesterday, I just reminded everybody once again, do you remember what happened just before Lehman Brothers collapsed? Now, if you can recall, back in 2008, Lehman Brothers didn't collapse just like that, okay? It was overnight. It basically is right. There were signs and there were problems, and there were people come out and say, you know what, we are safe, we are okay, we are not affected by this, and then bang, when the Lehman came down, then one by one it just started to collapse. Okay, so I'm pretty amazed by some people are still pretty confident with this right now, but I can tell you this, I am very bearish with ARC Innovation. Okay, I'm very bearish. Nothing against Cathy Wood, but look at it again. Okay, you can see right now the counter went up recently, right, and the volume basically went down. Okay, this is one telltale sign that the buyers are not convinced. Second of all, as well, right, okay, you can see there's a very big important technical point at $34. If $34 breaks, we can see as low as $30 coming in. Okay, and what is the fundamental reason then? Well, the fundamental reason is this: in the portfolio of this ARC Innovation, we see Coinbase. Okay, Coinbase is one of them, and we saw Roblox and of course Robinhood. Okay, now Coinbase, as you know, is a second company, a second exchange that I believe that will be affected very soon. Okay, my personal opinion. And of course Roblox, as we know, that the people, I mean, this is a game company, and other than whatever they have right now, which my son is enjoying it, I don't see the improvement here, and I believe that it will go lower. And recently the report, the earnings result is not fantastic at all. And Robinhood, okay, this is the retail platform for trading. Gosh, let me tell you something very important. Okay, apparently Sam Bankman-Fried, okay, he actually bought 7.6% stake in Robinhood recently. That was in May, and he has 56 million shares of it right now. So now he's under so-called under Liquidation Act, and there is a possibility that he has to dump this. And oh my God, think about this all happen. So with all this thing around there, I just feel that this there's a high chance that this repercussion will spread, and ARC, if it goes down, things will get very ugly. All right, so that are the first few part of some stuff. Let's go something to the economics and why I say that the storm is actually brewing right now. Now, I always like this lady from San Francisco, Fed President Mary Daly. Now, she's very open and she's very outright, okay, and she do give no nonsense view. So apparently, she actually came out and say this upfront: a pause is off the table. Okay, that means that she don't believe that there will be a pause on the Fed hikes. Okay, all right, then maybe the pace can reduce, but no way we will pause here right now. So she feels that we need sustained progress in the inflation fight, and she gave a very clear-cut sharing on CNBC. You can watch the video on your own. She says that we have to see the interest rate to go up to 4.5 to 5%, and unemployment to hit at least 4 to 5%. So apparently that number is coincide with mine, apparently. All right, so you can see right now her focus, she says this is a focus right on the level of rates. And of course, if that happens, it will not be nice to NASDAQ, because NASDAQ really looks at the dollar and the yield very closely. So if the dollar is go back up again and yield climbs up again, then the NASDAQ will have to fall. And of course, you can see that I already mentioned to you about this. So another Fed official, Williams, also came out and says that the monetary policy is not the best tool for financial stability. Now, William is the second man. The first person is Jerome Powell, then we have Brenner, and then we have William. Okay, so as you can see, Brenner is pretty dovish, but William is pretty hawkish. Okay, and his point is that the financial risk should shape the interest rate decision. So which means that if the financial risk is a problem, then we should really work towards having more rate hikes. So that is another view from two different officials, but of course again, with other officials are pretty dovish right now. So if you remember that this is something that we all understand, is that we are now having an even lower inverse relationship. Okay, so this is the 10-year and the 2-year yield, and this is clear that since July until now, that is really 4 months down the road to 5 months, we are still seeing inversion. This is pretty bad, because that means that people are willing to lend but at a higher rate versus the 10-year loan. So which means that people are not comfortable to lend the government the money unless you pay me more. So this is not a good sign at all. Okay, and that was mentioned again that I would say that was on 15 November, a couple of days ago. I already tell you that US employment will need to hit 5% by March 2023, and it basically correlates with what this Daly said. Yeah, apparently if you watch on the video, we had the same thing. So this is something that we need to understand right now. Okay, so that's something that we must look at it. So let's just look at this Target and Walmart. All right, we have this something here itself. Okay, let's look at Target and Walmart right now. Apparently, now the thing is that we saw Target price yesterday jump down, okay, in terms of price action, but Walmart actually went up. So a lot of people have been asking, how come they are all doing the same business, but why is there a difference? Now, if you said that, that means you didn't really understand what is going on right now. Okay, let me explain this to you. Okay, let me just show it to you right now on this factor here. Okay, just give me a moment. Okay, so let's just take a look at it right now on this chart here. This is Walmart and Target buyer profile. Okay, so first of all, they are both targeting the female shoppers, but more important, okay, is that look at this Walmart. They are looking at more towards the urban 76% versus the rural 24%, but for Target it's 95% on urban and 5% rural. So what does it mean? Okay, basically it means like this. Okay, it's between the non-essential versus essentials. So actually this is like more for Walmart, and this is more for Target. Okay, all right, so basically, right, when it comes to a recession or potential recession, usually people start to think carefully. Okay, guys, my wallet getting smaller, I need to think carefully how I spend money, so I will go for products that is more essential for the daily life. Okay, so like food, basic clothing, shelter will be my priority, versus high-end apparel, jewelry, sport activity, vacation. All this is not going to be in my list. Okay, so although we do know that we are going to have Christmas season, we have Thanksgiving, but we all can see that the economy is not doing well, and that is the difference there. So when you actually realize that if Target is actually suffering, then that means that a lot of other high-end products, right, they may be affected, and that is where the repercussion things may happen. So now let's go into bigger data and I'll share with you right now. Okay, so first of all, the bank is not really willing. Now this is from a Bloomberg article. The bank willingness to make consumer loans. Okay, apparently look at it right now. The banks are actually not really keen to lend money to the retail, and that's the reason why the retail sale is actually coming off. Okay, so when the banks are not that willing, you know that credit crunch is just around the corner, and this is something again we've seen before during the Lehman Brothers time. And of course, you look at it right now, the consumer are cutting back as mortgage cost rises. Okay, this is another problem here because of the interest rate factor right now going all the way up. Alright, so the cost of, or the affordability index itself is showing signs of coming off. And this is going to affect, again, a domino effect across the board. And apparently there's some ongoing saying that the housing rate in America had to go down by at least 20 more %. And this is, again, going to cause more problem for the retailers, okay? And this is something you must understand, the Baltic Dry Index shipping cost, okay? You notice that since June this year, okay, the number has been coming off. Okay, that means that the economy is not really doing well. That means that's the reason why you can see that Amazon is suffering, because when the lesser people are buying off on online, okay, because maybe now without COVID, people can go back on the street to buy, but the problem is that those people who hold goods in their inventories will suffer. And from seeing here itself, right, you can see whenever when the Baltic Dry Index actually goes down, we can see that the economy usually doesn't do that well. So another reason to be very careful of what we're seeing right now, even though the stock market is still firming up. So that's the reason why you must understand what is going on around the whole world to make a final decision. And of course, the household debt right now has soared to the fastest pace in 15 years as credit card use surges, okay? So why people are doing that? It's because they ran out of cash. Only when you run out of cash, you will have to use your credit card to pay for your mortgages, for your costs, daily expenses, and then with the interest rate rising itself, you have to pay more money, right? So the next thing we'll have to look will be the rate of delinquency. If the delinquency rate goes up, then we're going to see the big R. Okay, these are all the little things that you must understand, and you can see right now the saving rate is at the very alarming rate right now. Let's take a look here. This is a chart from 1960 to today. That means the 60 years chart. And you can see that, okay, the last time we saw a rate that is so low, that was back in 2007 and 2009, and now here. Okay, so back in 2007, we saw that the market actually was coming off, and of course in Lehman Brothers time it was worse. Okay, so now we are back here again. So what do you think? What do you guys? How can we avoid recession? I can't see it. The only thing is that now is stopping the holding from doing a recession is because the stock market is still hanging up. Okay, we are like 6% to 7% off the highest point. This is incredible. And why is that so? Because Wall Street allow you to buy back shares. They are allowing people to company buy back shares. If not, honestly, even Walmart data was not fantastic, but because they allowed the $2 billion buyback of shares, that actually changes everything. And of course, now the tech layoff for 2022 is rising at an alarming rate. Look at it right now. In November alone, the tech rate release of people has hit more than 30,000, okay? And this is the highest ever if you combine this all together. So what does it tell you? That there will be a lot of jobless people during this Christmas, Thanksgiving, and New Year, and they will try to find a way to go back into retail probably because technology is coming off. Then what happened? Imagine the costs keep on increasing. There will be an influx of these employees around, but then again, the business can sustain or the costs increase, things will just get worse, okay? So that's the reason why I feel that there will be a possible massive chaos coming soon, okay? There's a rational reason why am I doing all this right now, because I suspect that, right, in the month of December, January, February, March, these 4 months, there will be massive chaos in terms of the employment. And when that all happens itself, right, it will become a domino repercussion. And that's the reason why I want you to join me on the 26th of November at 10 a.m. Let me share some very important data with you. And of course, after that, make a decision to join me and for my 19 premium intake. Okay, so this is something very important. And thank you guys. I already see people coming in. About 42 people have already registered in the single day. That's very good numbers, but let's go further. Let's hit 150 if it's possible. Join me, guys. This is something very big, and you know that this is going to be very, very important to you, because if you are involved in any jobs, you really want to prepare yourself for this, because when that happened in America, it was spread. And in fact, I said this, that the first step or first place it will go is Europe, then US, then probably Asia. Okay, so traders, please be very careful on this. All right, let's look at the chart right now and see what can I offer you for today. All right, now so let's look at the my Dow Jones chart first. Okay, this is something that I want to share with you. Okay, now this is the chart that I have to share with you, my technical point that I shared here at 34,027, and I said that this point itself, right, is important because if the market cannot cross this point, there will be some profit taking. The next target will be as high as 34,768, okay? Now, the KFC level is still at 33,031, so as long as the market stays here, we are fine. But of course, if the support, which is right here itself, 32,553, is the real base. Now, if the market breaks below this, there will be a free fall, okay? Now, this is where it gets very crazy, guys. Okay, I was just doing my update yesterday. You know, this 95, 90, 85, 80%, right? So what I did was I did a split in between. So it's 82.5, this is 87.5, and this is the 92.5. Okay, now I don't take myself really serious, because if you look at the chart right now, from this is 100, right, all the way down, right, you notice that where the market was actually coming down from this point all the way to around this area here, and when it rebounded, right, you notice that this become a base level, and after that, when it goes up, right, it become a resistance. When it cross over it, okay, now the scary part is that I missed out yesterday was that I did not do the mathematics between 90 to 95, which is here is 92.5. Okay, I didn't do this particular line over the last 2 weeks. Now, if I had done that, oh my goodness, I would have found the highest level to short the market. Look at the way the market went all the way up, stop here, and reverse course all the way down to this technical point. Oh gosh. So imagine if I has done I was a bit more hardworking, I would be able to capture the highest point here and enjoy this right down. Oh gosh, what a waste. Okay, so I'm not going to do the same mistake again. So I left it there. This is in the 92.5% mark. Okay, so I'm going to tell you this, guys. 34,181. 34,181 is an important level to watch. Okay, if the market failed to cross this level after being touched, there's a chance of coming down. Now we see a four doji Dow Jones. Okay, oh my gosh, this is 4 doji if I'm not wrong. Okay, this is scary. That means that there should be a very big movement coming soon. Okay, so the 33,258 will be the imaginary support level for now. the market has to stay above 33,258. Now, if the market fail, then there could be selling all the way down to this point here, and that's 32,334 level. Okay, these are the technical level to watch out for, traders. You need to be careful. Now, China A50, this is bad news once again. Now, we thought that it has crossed MA30, it should be going up, right? And of course, with all the restriction for COVID has been released, better, we should expect the market to go higher. But apparently last 2 days itself, we have more and more news coming out, like Tencent coming out news that says that there could be some liquidation on its stocks, and that spreads today, and this is not a good sign. Now, MA30 is here, and that is for 12,083 right now. This level has to stay. If the China A50 couldn't stay above 12,000, 083, then there could be some selling again. Okay, so watch out for this, guys. Okay, so let's just look at our technical chart for today. Let's take a look right now. Okay, we have a DJDD confirm on this. Is pure mathematics. The system calculates for us automatically. Okay, so what we have right now, guys, let's take a look. Now today there's no doji, there's no pivot. Yeah, there's no pivot for today. So we have to use the opening price as a gauge. So as long as the market stays below OP, 33,654 is OP for today, then there will be some profit taking. Now the MLP is at 33,586, and we are pretty near right now. Okay, if the market hang above, touch MLP and recover, we can see it going back to 34,000 again. But if the market pulls below the MLP, then the 33,342 will be the first support. Now at the moment now, my KSI and my KRW are still pretty positive, so that's probably the reason why the market is still reluctant to come down, because my indicators show the boys have been buying and buying. But just take note, guys, if one day if my indicator flip color, that means that the selling can be pretty drastic. Okay, so this is something that I need to remind you. Now for the Nasdaq, it's a bit clear. Now Nasdaq, very clear. The BNB was here, and the market went up to 11,906, and every time it crosses it, right, the market did push up higher, but the selling just come in heavy. So now after 2 days of struggling above 11,906, we are now pretty resisted at the MLP of 11,799 for today. So with CCYR on the Nasdaq, I strongly believe that the Nasdaq may pull back down to 11,622 soon. Okay, and let me just see whether I can grab for you another chart here itself, which is the dollar chart. Let's bring it in right now. Okay, this is the US dollar chart. Now we can see that we have a bit of support right now for the US dollar at 105.70 range. Now I've been calling for buy at 105.60. all right, and I believe that as long as we can maintain the momentum, we can actually go to 107 first, and if 107 holds water, then the next target will be 108. Now, of course, what will happen if the dollar recovers? That means that the market is going to focus back on the interest rate environment, and of course, the 10-year yield will be watched carefully. And we can see right now the 10-year yield is firming up today. All right, the last 3 days have been coming off, but I believe that Daly and Williams, whatever they say, makes some sense, and the market may take notice of that. But more important is the Fibonacci. Now, taking the Fibonacci low and the high, the 23.6 is 3.9%, which the market broke, right? Okay, the 0.382 is 3.64, my bad. And the last time the market hit this point, it rebounded, but that was before the Fibonacci extension. So now this time the market didn't come here, and that is pretty positive, because for Fibonacci, when the market hits this support here, rebounded is expected, but when it breaks below, usually it go to the next Fibo, right? But if the market stays here and recover, that means that the market is no intention to come down to this point here. Hence, the market will go back to 3.9. And of course, when it go by 3.9, the US dollar is expected to go a little bit higher. Okay, so that is why I believe that the Nasdaq could come down to 11,622 probably today. Okay. The S&P 500, we can see that we have a new BNB right now, but something has changed. The S&P 500 has the KSI have been red for the last 4 to 5 trading days, and that means that it's near a breaking point. If the market loses the BNB 3954 support level, right, put it there. All right, if the market basically breaks below 3954, I believe that S&P 500 can come down all the way to 3864 level. Okay, so this is something to watch out for traders. You need to pay attention to this great important detail. Now, Hong Kong, Hang Seng, all right, Hang Seng propelled all the way to 18,478 on the 15th of November. But yesterday, we can see that it tried to recover after gapping down, failed. This is a strong reversal signal, and now it has MLP at 18100 perfectly and closed trading lower right now before lunch. So this is not a good sign, guys. I believe that if China A50 go down, then Hang Seng may have to be forced all the way down to the BNB RL level and at 16,858 level. The only thing that is stopping it is that the KSI and my KRW is pretty strong right now, so it will take a while. It will not like immediate, okay? So traders, take note. How about the Nikkei? Well, Nikkei has been doing loads of doji recently, and this is like exactly following the Dow Jones. So for today, as long as it stays above the BNB RL, which is at 27,942, we are okay. But if it loses this figure and kind of go down, right, well, the market has got itself pretty resisted right now. So the next target point could be as low as 27,649. But as long as, we must check the dollar very closely for this Nikkei. Yeah? So watch the dollar. Both KSI and KRW are still on the positive side. Okay. Now, crude oil has pulled down. Okay. I have said, guys, I'm expecting a pullback down because I told you guys the BNB RL and SL is fantastic. When it broke the RL, it went to the extension 1x1 brilliantly, stopped there, pull back. Then when it came back down, broke the RL, obviously it come to the SL. So like break resistance, come back to support. Then supported itself, break back resistance. Oh my gosh, the market have been playing this $4 movement brilliantly, and as long as you have my system here, you can really play with it and make the money of it. Okay, now we have a problem, guys, deep problem. Okay, so now we all know that the dollar is actually going up today. Okay, and the support level is at 84.22 for the BNB. So if the market breaks below 84.22, that means that there's a chance that it can go down all the way to $80. If my KSI and my KRW, they are showing more on the negative side, and there's a what we call lowering of the KRW, there is a chance for crude oil to plunge back to $80. And of course, that will affect the Dow Jones, because I said before to you guys, the crude oil and the Dow Jones has a bit of reflection. I mean, they actually follow each other most of the time. And of course, if that happened, right, the question you may ask me now will be, how about OXY, right? So OXY, you can see right now has pulled back a little bit from the $72. I still believe that we can try to buy back at some at $68. I'm going to write it down for you so that you just remember that. I think they can buy some at $68, and if you can get it cheaper, let's try to go for $63, $64, okay? All right. So that is crude oil. Now, how about the gold market? Okay, gold, to my opinion, is going to come down, okay? Now, gold today has broke below the 1770 pivot 2 level. Usually, that would be a sell signal. And today, it failed to even cross the MLP. It's a second sell signal. KSI and KCX are both pretty bullish. So, the selling will come slow and steady. Now, always I say this, don't fight the pivots, and the pivot is 1770.39. So my first target for my goal today is 1749.1. That's an MA 200. I believe that that will be the first base here. Now, if the market can't stay above this figure the next 2-3 days, then there's a chance for it to come down all the way to 1717 mark here, okay? Now, how about silver? Let's take a look on, oh, sorry, this is the wrong one. Silver, sorry. Okay, this is silver. Silver has pulled back down. You can see that the BNB RL is here, and that is that 2182. And yesterday we saw a reversal pullback and come with a doji directional day. And now the opening price is already below 21,848, which is a pivot 2. So that means there will be some profit taking today. If silver can pull back down to $20, that's a very good price to consider to buy some, and about $18 even more. I'm very bullish on silver, but I didn't ask you to chase here. Let it come down, buy from the bottom again. Okay, all right. Now, last one will be the Bitcoin and the Ethereum before we wrap it up. Now, this is not good. That means that the Bitcoin is actually doing sideways momentum right now with new BNB. So the upside is 1856.2, which I don't think it will go there. In fact, I'm pretty confident that we can see this level coming in. We could see 14,425 in the near term, okay? So I suspect that we have to be very careful over this weekend, because usually the weekend for cryptocurrency is not very good. And of course, if company want to announce anything in the weekend, over the weekend, things can get very, very scary, okay? So same thing for Ethereum. Ethereum is alright. I believe that it's going to come down, and this 1,050 is there. And the last time we see 1,050, Okay, it was, that was just about 2 weeks ago. So this is a figure to watch. Okay, don't play with this. This is going to be scary because KSI and my KCX are now pretty bearish right now, and things can get really ugly. All right, hope you enjoyed this video. It's a bit long today, but there's a lot of information to you. Wish you all the best. This is Cal signing off. Bye bye.